Gold quietly pushed higher on Friday, and there was something that happened that I wanted to talk to you guys about. Specifically, this rumor right here. The rumor that Jerome Powell, of course, the chairman of the Federal Reserve, the U.S. central bank, is considering resigning. And of course, this is not really based on anything from what I can tell. We can read into this just for a second. It says a senior Trump administration official said Friday that Jerome Powell is considering resigning as pressure grows for an investigation into whether he lied to Congress about the central bank's Palace of Versailles renovations to its headquarters in Washington, D.C. Of course, these are rumors, so let me just disclaim, we have no facts of this happening. Perhaps by the time you see this video, something may have changed, but we'll see. I mean, there's a quote here from the journalist saying, "I think this will be the right decision for America, and the economy will boom." And this all kind of comes at a head when the recent developments have been Jerome Powell getting pressured by the president, Trump, getting called too late, and people accusing him of needing to cut interest rates and holding back the U.S. economy and causing a whole bunch of extra debt expenses due to keeping interest rates higher. Now, of course, when the U.S. keeps central bank when the U.S. central bank keeps interest rates higher, that does mean that the U.S. national debt is more expensive to administer to. So that is the criticism towards Jerome Powell that some are saying. We can get into more as to whether or not I think the Fed should cut in just a little bit, but specifically, gold continued to push higher on Friday. And I want to talk a little bit about the gold predicament, the gold situation. We'll also be taking a look at what institutions did this week with the Commitment of Traders report that I'm going to go through in just a second. But first and foremost, when it comes to gold, why would gold move higher on this? Well, I'll tell you why. If pressure is getting to Jerome Powell to the point that he is considering leaving his post in kind of accordance with the president's desires, or whether it's more the congressional challenges, the allegations there or whatever, who knows? And whether or not this is a real consideration from Powell or not, we'll have to see in upcoming press conferences, or if we get some big headline that he did choose to resign. We'll have to see. But if he does choose to resign, what does that do to the price of gold? Well, simple answer, in my opinion, would be it would send gold higher. Why? Well, if Jerome Powell is the lock keeping us from cutting interest rates more aggressively, that would be, if he were to be removed from office, that would be very much a bullish thing for gold, because that would likely mean more rate cuts. It would also probably mean a bigger move higher for stocks and a bigger move lower for the dollar, because cutting interest rates is generally perceived as dollar bearish, gold bullish, stocks bullish. That is generally how it is perceived. We've been in consolidation for the last few months when it comes to gold's price action, and it is only a matter of time before you do get some sort of true breakout one way or the other. And I do think that the path of least resistance for gold at this time is to continue to move higher. This could potentially be the catalyst that we're looking for, but we'll see. For me, there's other reasons that I'm bullish on gold. I think there's some softness in the economy, a little bit of geopolitical risk that I want to hedge in my portfolio, and I like the price action. So we came down to this level of support. I went long over here along this longer-term upward trend line. And I've now got a situation where if we can actually break higher on gold, I'm going to take my stop loss and move it into just slightly into profit. Take a look at the top setups algorithm here really quick. I do want to see if gold is still getting a bullish reading. Looks like, it's just under with a +4 score. Not super bullish, but also not bearish either. So gold kind of getting a neutral reading. Here's some of your stronger reads. Actually, let's look over at the top setup simple page. I think this is a little easier for people to see on YouTube, especially if you're watching on a mobile device. These are our current bullish listed assets on the Edge Finder. You've got Swiss yen, NASDAQ, Euro CAD, Kiwi yen, Euro pound, DAX, Dow, Kiwi CAD, the Chinese stock market, the FTSE, and the Euro dollar. On the flip side, some of the bearish readings. Thought this was interesting. I'd like to look at the pound dollar. This is one we talked about on Friday. We also have CAD Swiss, Aussie Swiss, pound Swiss, dollar Swiss, Kiwi, pound Kiwi, and Euro Swiss, and then Aussie New Zealand. So there's your list. And I do want to talk about, in terms of gold, why do I think it has more upside? Well, I do think that rate cuts are coming this year. I think that's probably a path of least resistance for the Federal Reserve. And so for me, what I'm looking to do is I'm looking, if we can break through this high, to trail a stop at least around to break even. But specifically, I'd be looking for this kind of move in order to take my stop loss and really trail it into profit by a wider margin. So I like to trail stops. It's my personal way of managing my trades and letting my winners run. I do have a comparable example that I can give you really quick on like the Russell 2000, which is my current best trade of the year. I have trailed a stop loss several times on this trade. You can see all my different levels that we've come back into and retested and then shot higher, retested, and that's given me several opportunities to trail from my initial risk further into profit. On Friday, we did get a little bit of selling on indices. We'll talk about that in a second, but I'd be fine to hold the trade as long as we can hold support around this 2200 level on the Russell. So that's an update on the Russell trade. Also wanted to show you guys something pretty important that I came across, which is the commitment of traders data for the week. Let's see what institutions did in the prior week. This is a weekly filed report. You can see the latest updated data came from July 11th in the afternoon when this was reported. So let's take a look at the commitment of traders data. First and foremost, we can take a look at the net positioning. This is more useful for long-term traders. If you're a long-term swing trader or position trader, I'm talking weeks to months, this top indicator might be useful to you. We can see generally that they are still bullish on gold. They're bullish on silver. These are their overall positionings, and we're looking at the commitment of traders data specifically for non-commercials. These are hedge funds, banks, etc. The things that they are most bullish on a proportional basis, things like gold, the South African rand, silver, the Japanese yen, U.S. oil, euro, copper, NASDAQ, platinum, and that's going to be your bullish set. On the bearish side, we've got the Canadian dollar they are bearish on, the Australian dollar, the Swiss franc, 10-year treasuries, the Russell, the SPX, and that's it. So there's your bullish and bearish from a long-term net positioning. Now if we scroll down, we'll find out a little bit more for more of what is interesting in my view for shorter term traders. Now, if you are a shorter term trader, meaning you don't hold trades for weeks to months, this table is probably more useful to you. The reason for this being more useful is because this shows us what they most recently, in the most recent filed reporting, what they actively have been buying more of or selling more of. So let's take a look at this. In terms of things that they were bullish on this week, there's not a whole lot. Swiss franc, they did some buying on the Swiss franc, which is more of a risk-off play, by the way. This is a defensive currency. Copper, they did some buying on copper. NASDAQ, they bought some NASDAQ. And specifically, if you want to look at this from a easy standpoint, just look at the change in long contracts versus the change in short contracts. We've heat mapped and made this easy to read with our software here. So NASDAQ, you can see they did some buying. Kiwi dollar, they did some buying as well. They removed shorts, right? That's the way to read this. They removed short contracts and added long contracts. Euro, take a look at the euro. What did institutions do with the euro? They bought the euro and they also shorted the euro. So how is that? How does that work? Well, they can do both at once, right? They can add shorts and add longs. This is not when I say they, it is the collective group of non-commercial reporting entities within the Commitment of Traders report. So this is a whole bunch of different hedge funds. They don't all agree all the time, but we generally like to look at their consensus as a signal of bullishness or bearishness, as these are the big players in the game. Let's take a look at the British pound. British pound, they did some buying, right? Added longs, decreased shorts. Dollar, they decreased longs and decreased shorts. I'd say this is pretty neutral. Gold, this is pretty neutral too. They added both longs and shorts. Let's get into something more interesting. Oil, they decreased longs aggressively and added shorts. U.S. oil was a bearish week. Take a look at the Australian dollar. The Australian dollar, they decreased longs, added shorts. Russell, decreased longs, added shorts. 10-year treasuries, decreased longs, decreased shorts, much less. CAD, decreased, increased shorts. Silver, increased shorts, decreased longs. You can kind of see we're going by line here. And then we get into this last couple. They significantly sold the Japanese yen, which I thought was interesting. The Dow Jones was also sold pretty heavily, and the SPX was sold and shorted very heavily. So very interesting. So they did, in fact, sell this past week when it comes to the major U.S. indices, which I think is a good thing for us to turn to now. There was some selling, and this is selling after we've seen a big push higher. Before I move on from this Commitment of Traders data, let me tell you how you can get access to the Edge Finder to use this for yourself anytime you want. at currently one of the biggest discounts that we're doing all year long. The Black Friday sale is not what we're offering, but we are offering 40% off the Edge Finder at this time. So if you want access to the Edge Finder for that huge discount, we're offering Black Friday prices during this time right now, the July sale that we're doing, the summer sale. The Edge Finder for a limited time is 40% off. To get 40% off, click the link in the description down below. If you want some information, use the promo code that's there. The promo code to use is YTVIP. Like I said, we are offering Black Friday pricing during this month only for our summer sale that we're offering at this time. So don't miss out. Again, it's the lowest price that we do all year long. And the only other time that we'll be doing it is months from now for Black Friday. So don't miss it. Take advantage. Get yourself a copy. And also just a fair warning, just so you are fully aware, there is the possibility that between now and Black Friday, we do actually raise the overall price of the tool. As the tool has become bigger and better over the years, we've added so many features. And while existing members do not have to pay any additional fees to keep access to the Edge Finder, it's a one-time payment, by the way. New users who have not accessed it yet will have to pay the existing price that we offer on our store at that time. So prices are subject to change, so just fair warning on that. So check it out. Again, 40% off down below in the description of this video. So back to the indices, where are we at with this one? Well, if we take a look at the S&P 500, we have had just kind of a rock star couple months. This is, I've been hearing that this is the fastest recovery we have ever had, or at least in the last few decades. A move of 20% down, pretty much erased and back to the scratching board, right back to the starting point in just like, it was a round trip, like 120 something days, which is insane as a very, very fast turnaround. For a 20% decline in the stock market, for it to come roaring back is pretty impressive. And it shows the resiliency, of, in my view, the world we're living in. This AI revolution stuff is real, in my view. To me, can stocks get overvalued and overhyped? Of course they can. But this concept of AI, I see it every day in my own small business. The software tools that we build and the AI that we implement is incredible. The tools that are at our disposal to help us build such great tools are pretty remarkable. And so, to me, it's like the efficiency of AI and it boosting corporate America across the board, to me, produces the opportunity for more higher prices in stocks, because companies are going to run more efficient and they're going to make more money than ever. So to me, and plus, you have some stimulus from the Trump bill. Whether you like it or dislike it, I think it's government stimulus. It's essentially more money printing that will go to corporate America, which will boost stocks higher, in my personal view. Additionally, you have rate cuts coming. So all of this, what I just discussed, right? These themes are not necessarily in the Edge Finder, but the hard data is. And that's why we're still getting bullish readings on the NASDAQ. So commitment of traders data, institutions are bullish. Retail positioning is pretty neutral, but that leans bullish just by default on the Edge Finder. Seasonally, it is a good time to be long the NASDAQ. Trend following wise, trend is to the upside clearly, so I'd be looking for pullbacks within that trend. CPI is cooling. That's another big one for us. Employment data was strong. I mean, to me, you have sort of the perfect storm for the indices, which is why, it's almost too good to be true. So for me, it's like, okay, I can't do anything here. Yes, everything points for me right now. The majority of my indicators point towards bullishness, but that does not mean I just go out and I buy the NASDAQ blindly. I'm still interested in pullbacks to perhaps like the 6,100 on the S&P 500 or 5,900, right? These areas would be much more attractive risk to reward points for me to possibly set up trades. But as I mentioned earlier in the video, I am already long the indices. I have a long position on the small cap index, the Russell. I'm also long the German DAX, which I'll get into in just a second. Same story on the NASDAQ. It's moving very similar to the S&P 500, with big tech making up a huge proportion of the holdings of both the S&P and the NAS. I'm looking for pullbacks to like 22,000 or 21,500, let's call it, as a possible entry point, at which case I'd start to look to add shares to my existing stock portfolio or trade the indices on the long side, specifically getting long NAS. Dow Jones still yet to make a new fresh all-time high, but sitting just shy of it. To me, both scenarios could be plausible, but would be interested in a pullback to a 43,000 or a break and retest. Both of these scenarios could happen. Both of these areas, I'd be bullish on the Dow Jones this time. Path of least resistance for indices, like I said, across the board is up at this time in my personal view. So pullbacks on the Russell, however, not going to do anything other than just trailing my stop. Last week, if you were watching my live streams, I said every single day that my primary objective of the week was to trail stops on my existing Russell position. It is the largest position in my portfolio, and it is the biggest winner of my account this year. So my goal this coming week is to continue to do what I did last week, which is watch for higher lows. If we get a higher low, right, if we get something like this, my job, my quote-unquote job, is to keep trailing stops anytime we break highs. So specifically, people ask, when do you trail stops? Well, when I get some sort of higher low and a breakthrough market structure highs, like, let me use a smaller size, and that's way too big. Hold on. Something like this, right? If we were to get a significant breakout through this high once more, I would consider that a higher low opportunity to trail my stop loss. So I'm just looking for market structure to tell me when it's time to continue to trail or to get out of the trade. If we go into this week, guys, and we get indices just falling apart, I'm going to take profits on the trade, lock it in, and look for the next setup. So I'm in a really good spot. It's not a question of how much money, or it's not a question of whether I make money or not on this trade. It's a question of how much money does the market want to give me, and I'm just going to show up to work each day until I get trailed out. So I mentioned wanting to talk about the DAX. I have a similar situation with the DAX, a really nice reversal here to the upside. We pulled back into a level of support. DAX was a bullish setup on the Edge Finder. I'm not sure if it still is. Yes, it is. DAX is still a bullish reading on the Edge Finder. That was confirmation at that level of support for me to take the trade. I went long, put a stop below structure, still in the trade and trailing on this one. Stop is locked in, so I can't lose money on the trade. Similar situation to the Russell. It's not a question of whether I make money. It's a question of how much I make. So if you get this kind of push, stops will get trimmed just slightly higher, looking for any sort of higher lows from there to start to trail further into profit and locking more. So I'm in trade management mode. I know that's not always the most interesting content to discuss on my YouTube channel, but ultimately that is what I do on this channel. I discuss the trades that I'm in and what I'm watching. So that is my current situation. I'm trailing stops on indices, and we'll keep going. We'll push on. Let's talk about the dollar. So dollar index, where are we at with the U.S. economic heat map? I think this is an important thing for us to consider. If we take a look at the overall summary, what you guys have to recognize about this coming week is we have CPI coming. And the economic heat map this morning decided it wants to have a long weekend and not work right now. So I'll look into that afterwards. But what we do have, which is the same essentially thing, is the economic surprise meter, which the economic surprise meter, if you're unfamiliar with this indicator, it's another feature that's available to you within the Edge Finder. If you take a look at this, so what we're looking at is all of our major currencies, right? You have euro, pound, yen, dollar, etc. Currency economic strength page showcases economic scores for each currency. A higher score indicates that the majority of key economic metrics essentially favor the currency underlying, right? GDP, PMI, CPI, and they've been strong relative to economic forecasts. This is the key part, right? So we're looking at the actual data that comes out versus what was forecasted by the community. So the dollar has been mid, right? It's not too strong, not too weak. Pound has been weak versus expectations. Euro's been really strong versus expectations. Yen's mid, Swiss franc strong, Aussie weak, CAD weak, Kiwi strong, right? So that kind of gives me a basis for my currency trading, right? So if I'm going to be doing any currency trading, my bias is neither bullish or bearish on the dollar right now. It's very neutral, right? But if I was to look at something more like the euro or look at the Kiwi dollar, these would be things that I'm looking more on the bullish side. So dollar specifically seems to be in a really strong downward trend, but I think we have to look to CPI to determine what comes next. If you get a CPI print that really gets strong or weak, I mean, let's see if we can get some inflation data. Let's just set the scene for CPI this week, right? CPI has been cooling off within the Edge Finder. We can see, for the last 1, 2, 3, 4 meetings or 4 data point drops for CPI, we've had cooler than expected inflation prints. So the question will be, are we going to continue this downward trend in inflation, which would allow the Fed to cut interest rates and probably be a softer story for the dollar, meaning weaker, bearish? and that's kind of been the theme, right? We've had cooling inflation, and go figure, the dollar is following inflation, right? So that makes a lot of sense. Fundamentals are important. And so we do see, inflation cooling off, and especially recently where it's been cooling off faster than people have been expecting. That red dot that you see on your screen for new fundamentalists, that's our forecast, right? So not ours, it's the economic community. There's like an analyst groups that put out these expectations based on all sorts of mathematic models, et cetera, what they think the inflation rate's going to be. And so when you get the blue bar, which is the actual number that comes out, significantly undershooting what was expected, and you see that on a consistent basis, to me, I look at this and I say, yeah, it's a good chance that CPI probably continues this trend of cooling off. Now, it doesn't have to. It could come in strong, or high. But I think the dollar sort of needs that. If you're going to have any sort of reversal or bottoming out in the dollar, you need a CPI print that is hot, right? Now, the market doesn't want that. Gold doesn't want that. Stocks don't want that, right? Nobody really wants hot inflation again, unless you're a dollar bull. If you want to see a reversal, then yeah, you would probably want hot inflation. But for the vast majority of human life, we want inflation to go down, right? Because inflation down means borrowing costs get lower, stocks can do okay, et cetera. So, when it comes to the US dollar, however, this thing has been in a big downtrend. And for me, this is a hard one to get bullish on unless you get a very hot CPI print, which could potentially reverse the story. But right now, you did get an NFP report that was strong. So this is why I can't be too bearish or too bullish, right? NFP was strong. Inflation is cooling, though. So we'll see. That's my perspective on dollars, very mixed, as you can tell. When we get into some specific currency pairs, you got euro dollar. If I was to place a trade on this one, it would be bullish, but it would be on a pullback. So I would be more interested. As I mentioned, I'm pretty bullish on the euro. Could potentially be interested in picking up some long exposure at some of these levels that I've marked on the screen, 1.16, 1.145, and 1.13 as rough areas where I'd potentially look for some bullish setups personally. Pound dollar, not really interested. In fact, this one on the top setups indicator is actually getting a bearish reading. So if I go to my top setups indicator and I flip this around, check this out. So pound dollar is actually getting a bearish reading. These are our most bearish assets. I just flipped this by selecting the score button. And so pound dollar is getting a bearish reading. So I'm actually looking for failure at support for possible shorts on the pound dollar, which is interesting because that would be kind of a statement of bullishness on the US dollar because you're short pound, long dollar. So that's a possible candidate on my watch list depending on what happens with CPI. If you get a strong CPI print for the dollar, this is likely going lower, in which case I'd be looking to fade this kind of uptrend that we've had on failure of support levels getting broken, right? So that's what I'm looking for when it comes to the pound dollar. Those are top setups for me for sure right now that I'm watching. Kiwi yen, euro yen, some of the yen pairs. Kiwi yen looks great, but again, it's kind of run away from me. I'd be interested in this level, which was resistance. If it can pull back into this, hold on, let me just fix this. There we go. So this level here, right? If we were to get a pullback into this zone, I'd be interested in possibly looking to pick up some long exposure on that side of things. Euro yen has just been a rocket ship here recently. You can see this one's not even close to pulling back. So, I mean, my entry point would be so far away, it's not even worth talking about. So that one's not really a current setup for me at all. Dow Jones, bullish. DAX, we already talked about indices. I'm pretty bullish across the board on those at this time. And let's see what else, anything of interest. Like I mentioned earlier, guys, the Edge Finder 45% off sale is ending soon. Take advantage. Link is in the description. Promo code is there as well. All the information could be found on that front. If you're looking for better brokers, also, quick plug as well. If you're looking for brokers, take a second to listen to this. If you go to our website, a1trading.com, and you do a1trading.com/brokers, or you just go to a1trading.com and click brokers and prop firms, we have special sign-up perks with all of these. We have promo codes, we have free shares, we have sign-on bonuses, all sorts of different things available to you on our website. Again, go to a1trading.com/brokers, and you can explore all of the different special offers that we've worked out with these brokers. So, obviously we have a following across our different socials on the Trader Nick stuff, A1 Trading stuff, our newsletters, our articles, all these different things that we have going on. And so with that, we've leveraged some really great deals for our traders who are watching, who sign up with the brokers that we've affiliated with. Now, fair warning, it is an affiliate referral stuff. So if you do it, you'll be helping out our channel, helping out the work that goes on behind the scenes of this YouTube channel and of all our tools and stuff. So if you're interested in checking out a better broker or signing up with prop firms, etc., all of that is available on our website, a1trading.com/brokers. And like I said, there are some special deals that have been worked out just for you guys. So you get something out of it, and so do we, for offering kind of this content that we do. So thank you guys very much for watching and making it to the very end of the video. Thanks so much, and we'll see you next time.